I almost spat out my coffee this morning. Why? Because I saw Apple's stock price live on a blockchain. No joke. It wasn't some screenshot or delayed data. It was the real, up to the second price of AAPL. But on a crypto network for anyone to see. That was the moment that I knew something weird and potentially game-changing was happening. How the heck did Wall Street's own crown jewels like Apple and Microsoft end up streaming directly into DeFi? I had to find out, and trust me, this story only gets crazier from here. So I did what any curious crypto geek would do. I fell down that rabbit hole, and at the bottom of that hole, I found Chainlink, yeah. The Oracle guys, right? The ones who fed blockchains real-world data, except this time, they weren't just posting crypto prices or weather information or whatever. Chainlink quietly flipped the switch on real-time stock data for blockchains. We're talking US equities and ETFs on-chain, updated live across 37 different blockchains. Now, when I first read that, I had to double check. 37 blockchains. I didn't even know 37 blockchains existed that people actually cared about. Apparently, they do. Ethereum, Solana, 𝗗𝗶𝘀𝗰𝗋, and even some names that I barely even recognize. 𝗗𝗶𝘀𝗰𝗋, who knows? But they're on the list. Now, let's think about what all of this means, right? The same real-time feed that tells you Apple's price on NASDAQ can now beam onto, let's say, Ethereum or Solana. Not just Apple either. They mention tickers like Microsoft, Nvidia, my beloved AI stock, and ETFs like SPY and QQQ. All the big market movers piping straight into the crypto world. Now, if you're not getting goosebumps yet, you might not fully grasp how off limits this kind of data used to be for blockchain apps. Now, I remember the days when DeFi platforms had to kind of, I guess, MacGyver their own price feeds for tokenized stocks, right? Often scraping together delayed info or using synthetic pricing. It was clunky and, frankly, a ticking time bomb for anyone trading those synthetic stocks. So here is where Chainlink's new data streams come in like a superhero with a utility belt. They're not just dropping a price and walking away. No. They're giving context. See, the market or the stock market isn't like the crypto market, right? It's not 24/7. It actually sleeps at night. It takes the weekends off and occasionally even hits pause buttons when things go a bit too wild. Now, traditional oracles would typically give you a price, maybe updated every few minutes, and well, that's it. But if a DeFi app natively naively took an old price while the actual market was closed, well, disaster could strike. So imagine a crypto exchange letting you trade a tokenized Tesla stock on a Saturday based on Friday's closing price. Well, one tweet from Elon in a few hours, and well, that price could go and be wildly off, right? Yet people might still be trading it on chain. So by Monday, real Tesla opens 20% different and boom, somebody on chain just got wrecked because the system didn't make the market or didn't know that the market was actually closed when the price on a Saturday was still trading. It's scary, right? So Chainlink basically said, that's enough of this nonsense. Let's do it properly. They built in features to make these on-chain stock prices context aware. Now, I love that term now after reading all about it, right? It means that data feed, or at least the data feed, doesn't just tell you what the price is, but it also does a little bit of, tells you a bit about the situation. For example, it flags up if the stock market is opened or closed, so that if you're a smart contract, you can code in and say, hey, if market_closed flag equals true, maybe pause trading or at least warn users. It also includes a, I guess, staleness indicator, indicating, or at least essentially a timestamp that says that when the price was last updated, right? If you see that the price hasn't changed in, let's say, an hour, during what should be an active trading session, well, that's a red alert. It could mean that you need to halt, or some of the other things like outages are occurring. Now, a DeFi app can automatically say, whoa, something is off. Let's hold off on executing any big trades. Now, in TradFi, they have circuit breakers that halt trading during crazy volatility or technical issues. Now, DeFi can have something similar because the oracle is actually whispering, psst, something fishy is about to happen. Maybe pause in its own ear. Now, this is the next level stuff for DeFi developers. I know it might not sound rather sexy, but it is, right? As I dug deeper, I found out just how granular it can get, right? Chainlink is pulling data from multiple different sources. I saw names like Tinglo, FinHub, and even Finalto, right? By aggregating from a few different places, they ensure that no one source glitch can actually ruin the entire feed. And the data goes straight through a network of oracles so that it's not coming from a single server either. And that could be a single point of failure, right? So each data kind of gets its own time stamped and delivered with sub-second latency. Sub-second, right? That is the crypto that I kind of trade, usually gets updated every few seconds at best. But these guys are pushing stock prices on chain faster than a hiccup. So at this point, I am thinking to myself, this is pretty cool tech, but does anyone actually use it yet? Or is it just a fancy demo? Well, it turns out that it's actually already getting used. Now, at least I saw that a particular and popular decentralized trading platform called GMX is already on board. Plus, a Solana project is there as well, and even, versions of GMX on Solana, right? That means that if you're one of those platforms, you might soon be able to trade or lend using real stocks or indices as easily as you trade crypto assets. So picture opening up a decentralized trading app and going, should I long Apple today or maybe short the S&P 500 via a tokenized SPY? Now, all without even having a brokerage account, potentially 24/7. Well, with pauses when needed, as we discussed. Now, it's kind of like mind-bending here, right? Because a friend of mine loves trading stock options. And I joked, right? Soon you'll be able to degen trading Apple on a DEX at 2 a.m. on a Sunday. He was half horrified and half intrigued. Now, let's zoom out for a second here. There's a bigger narrative, right? One that actually blends the tech with finance in a way that gets both crypto kids and Wall Street suits raising an eyebrow. Now, it's this whole kind of trend of tokenizing and tokenized real-world assets, right? RWAs is kind of often abbreviated as. Now, we've probably heard buzz about tokenized treasuries, real estate, or whatever. It's basically the idea that you can take stuff from the real world and represent it as a token on-chain that you can easily trade or use in DeFi. Now, I know this was kind of a growing trend, right? But the numbers I stumbled upon are still kind of blew my mind away here. As of now, right, there's reportedly over $275 billion of at least worth of real-world assets already tokenized on blockchains. That was $275 billion worth. And we're not even talking about mainstream adoption just yet. That's kind of like the early experiment phase, and it's kind of already $250 billion. Now, some research folk actually predict that we could see over $30 trillion in tokenized assets by 2030. That was trillion with a T for context here. $30 trillion is more than a GDP of the United States or the market cap of all the stocks on the New York Stock Exchange. Basically, it's a huge chunk of global finance potentially moving onto blockchain within the next 5 years. Whether that number ends up being 5 trillion or 50 trillion, the exact figure isn't really the point here. The point is the trajectory, and it's up and to the right in a really big way. So I'm just here and I am connecting the dots. If tokenized assets are going to be the big wave, having something like Chainlink's data streams is going to be crucial. Now, one quote that I found from 𝗗𝗶𝘀𝗰𝗋 at Chainlink actually put it perfectly, right? He kind of called it the critical kind of gap between traditional finance and blockchain, right? And it's now being closed. That's exactly the US equities were largely absent from the tokenized party up until now because the infrastructure just wasn't there. So you can't invite Wall Street to the DeFi party if you don't have the proper music and lighting, right? Now, in this particular case, reliable data and compliance. Now, Chainlink basically just DJ'd the music and set up the kind of strobe lights for stocks to actually join the dance floor. Now, before we all start celebrating and planning our retirement on tokenized stock portfolios, I've got to hit pause here for just 1 second because we need a disclaimer. Now, I know, disclaimers, they are boring, but this one is super important and I need to say it verbatim so that it really does sink in. Now, this one might just shock you, but I'm not a financial advisor and nothing in this video is financial advice, right? Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video today is for entertainment and educational purposes only. All right. So we got that out of the way. I'm glad, right? Because what happens next is something that's going to be mind-blowing. And basically, you don't want to YOLO your life savings into anything just because some dude on the internet and on YouTube, that's me by the way, is excited about some tech. You should be smart. You should do your own research. You should never invest more than you can afford to lose. Okay, let's get onwards. Now, with my kind of conscience kind of clear here, let's kind of talk about the finance angle and all of this in a little bit more detail, because it's not just the tech for tech's sake, right? There is actually a reason that Chainlink is doing all of this, and it involves big players and big money, right? And here is the thing, right? If you want institutional investors, so think banks, hedge funds, pension funds, to dip their toes into crypto or DeFi, you've got to solve two rather big issues simultaneously. One is the technical reliability. Check, right? Real-time, accurate data feeds for stocks definitely help there, right? And two is the compliance and regulatory piece, right? Institutions live and breathe compliance. So if something isn't compliant with regulations, they simply cannot touch it, no matter how great the returns or the tech actually are. So guess what? The very same week that Chainlink rolled out the data streams for stock, they also announced something called Chainlink ACE. This is the automated compliance engine. And I'm not even kidding you here, right? It's kind of like they had a master plan all along. First, build tech bridges, then build legal bridges. That's ACE is basically a framework to enforce compliance rules on chain. Now, that might sound a little bit abstract, so let me break down an example, right? Suppose a traditional stock gets tokenized. Regulators might say, sure, you can trade it, at least this stock token, but only if every trader passes KYC and AML checks and the token can't be held, let's say, held by investors in a country where they're not allowed to, right? How on earth do you enforce that on a decentralized network? Well, that is where ACE comes in, right? It's designed to let developers bake in rules like the laps straight into the smart contracts. So a token could be coded in such a way that it only moves between wallets that have certain credentials or are on a whitelist of verified investors, right? Or maybe it could automatically pause transfers if some rule is actually tripped, like a human or another smart contract gives approval. So Chainlink's ACE basically says that to at least two institutions that, hey, we know that you have a ton of rules to follow. We've got a system to help you follow them on chain across multiple different blockchains and jurisdictions in a consistent way. They even tied it to an identity system, right? They read, at least I read that they've been working on, at least with Global Legal Entity Identifier Foundation, which is the global standard body for verifying companies' identities, right? They're also working with traditional finance firms like Apex Group on this. It's wild. 1 minute I'm reading about decentralized oracles, and the next minute I'm in the weeds of compliance architecture with acronyms like KYC and VLIE. It's not your usual glamorous crypto headline. It's actually super, super important. Now, here is why And by doing this, Chainlink is basically rolling out the red carpet for institutional capital to enter the crypto space. And not in a small way either. They straight up said ACE could help unlock hundreds of trillions of dollars of capital that's currently sitting on the sidelines. And yes, you heard that right. $100 trillion. It's almost $100 trillion worthy. Now, when I saw that number, I had to make sure that I wasn't reading something wrong, right? $100 trillion is an astronomical figure. It's basically saying we want to make it so that every big asset manager, bank, etc., can bring over a chunk of their portfolio into tokenized forms without breaking any laws or rules. Ambitious much? But hey, right? Sergey, is known for thinking big. And in an interview, he basically implied that with this compliance piece, the last puzzle piece is in place for trillions of dollars to flow on chain. It's a bold claim, but it even gets if you even get just 1% of that $100 trillion, we're talking $1 trillion flowing in. That alone would be double the total crypto market cap, of some of these assets. It's insane. But let me pause here and acknowledge something, right? It's a little bit of a kind of controversial direction, for some of the crypto community, right? Crypto purists might say, who cares about Wall Street and their rules? Right? We're building an alternative system outside of all of that. And I feel that sentiment, I do. But the idea of needing compliance frameworks and catering to institutions feels more, at least almost, I guess, like actually inviting, principals of your high schools to a party. Like, do you really want the adults here, right? Isn't the whole point to create a new playground? But here's the flip side. Mass adoption and serious liquidity often won't happen unless the big players actually come in too. And those big players come with their own suits, ties, and yes, compliance checklists. I see it as a bit of a trade-off, right? A dance of sorts, right? We want the innovation, we want the openness of DeFi, but if we can integrate just enough compliance and real-world data, maybe we get the best of both worlds. Maybe it's definitely a fine line, right? But I'll be honest, part of me is incredibly excited. Like, if this works, it could supercharge the crypto space. Just imagine a world where within your own crypto wallet, you can hold not just Bitcoin and Ethereum and some NFTs, but also tokenized Google stocks and some tokenized government bonds earning yield, a piece of real estate maybe, right? All seamlessly, right? And you could use them in DeFi protocols. You need a loan, put up your Apple shares tokens as collateral and borrow USDC against them. Want to trade, go long on Tesla at 10 p.m. on a decentralized platform because you think it's going to pop tomorrow morning at opening bell. The 24/7 global market dream extends to everything then, not just crypto, and that is the upside scenario. The other part of me is quite cautious here. If we bring everything on chain but under heavy compliance, then we have to ensure that we're not just recreating the old banking system on new rails and then slapping a crypto label on it, right? The hope is that even with compliance, the efficiency and accessibility of these systems will be leaps and bounds better than the legacy system or legacy finance system. Right? Ideally, you shouldn't need to be a millionaire or an institution to benefit. Maybe your average Joe or Jane, could own $100 of a tokenized Tesla stock and use it in ways that they couldn't do before. Fractional ownership was hard pre-crypto, but it's easy with tokens. And speaking of average folks getting involved, I have to mention something that makes me rather proud. We have a free educational Discord server. The link is in the description down below, by the way. It's kind of where we chat about all of these developments, and I've been buzzing about Chainlink lately, right? People in there kind of range from total newbies to some really kind of sharp devs and even finance nerds, right? We've been tossing around ideas like what happens when exchanges like NASDAQ close for the day? Does DeFi just twiddle its thumbs? Or how will regulators react when they see billions in stock trades happening on blockchain outside of their usual kind of, I guess, perimeter? Now, if you're into those kind of discussions, seriously, hop into the Discord. It's a chill place to learn and speculate. And yes, it's free. Just a bunch of us nerding out and helping each other along the way. Now, earlier, I also tossed out something about Kraken Pro, and I want to touch on that again, right? Kraken Pro is one of those crypto exchanges exchanges that I personally use and trust. Now, I've been around the crypto space for many years, and they've actually catered to both regular and advanced traders too. Now, why am I even bringing them up? Well, when I imagine this future stocks and crypto merging, I imagine exchanges having to adapt too, right? I wouldn't be surprised if down the line an exchange like Kraken Pro offers trading of tokenized stocks alongside crypto. I mean, if DeFi is doing it, centralized exchanges are going to want a piece of that action too, right? Now, this might just be a list of tokens that kind of tracks Apple, for instance, but instead of some arbitrary price, it's fully backed and fed by something like Chainlink's data streams plus legal structures for actual ownership. It's speculation on my part for sure, but it's not that far-fetched, I don't think. Coinbase has already hinted at tokenized securities in the future, right? Binance did something with tokenized stocks briefly, though that got shut down due to regulatory issues. It's a space to kind of watch. And hey, if you aren't on Kraken Pro and want to check it out, I have an affiliate link that's down in the description. If you use it and sign up and trade, it doesn't cost you anything extra, but it does help the channel out here. Affiliate link, thank you in advance. It's a win-win, and I do appreciate it. All right, let's get back to Chainlink to kind of wrap up this story then, right? Because there's an aspect that I really find kind of poetic here. Chainlink started years ago with a simple but critical job, feeding crypto price data to smart contracts, right? Without it, a lot of the stuff that we see today just wouldn't happen. They basically became the data plumbing for DeFi in at least DeFi's big first wave, if you will. Now, without Chainlink, things like Aave or Market Maker or MakerDAO and, Ethereum smart contracts likely wouldn't have been anywhere near as robust, right? Now, here we are, right, in 2025, and Chainlink is again positioning itself as the plumbing, but this time not just for crypto assets, but for everything, the entire financial market's data and the rules that govern the market. It's kind of like watching a software update from Oracle 1.0 prices only to Oracle 2.0 prices plus context and compliance 1.0 rules engine, right? The scope is expanding, and it's expanding massively. Now, one cool real world anecdote here is that I found out that a bank in Turkey called Myson Bank, probably absolutely murdered that, I apologize, has actually already integrated Chainlink for some tokenized asset stuff. It's one of the first banks there to actually play with tokenization, and they saw Chainlink as the go-to solution for secure data and proof of reserves and so on. That tells me that this isn't just crypto companies talking. Even some forward-thinking banks see the value, and if one bank is doing it, you bet that others are watching and taking notes. Banks are conservative creatures, but once one shows it can be done safely, others will follow out a competitive, at least out of competitive necessity. So, stepping back, what have we here is a kind of narrative of convergence then. Right? The lines between traditional finance and crypto are blurring, and honestly, the term TradFi versus DeFi might eventually completely disappear, and it'll just be finance, and maybe you won't even care whether it's a blockchain under the hood or a legacy database, right? You'll just care that you can transact anytime, anywhere, with a wide array of different assets at low cost and with transparency. That's the dream scenario, and Chainlink, weirdly enough, is smack bang in the middle of that story. Though they're not as hyped on Reddit or Twitter as some of these flashy L1 blockchains or whatever. They're like the quiet achiever, doing the unsexy work that actually makes the sexy things even possible. And you know what? This whole deep dive started with me just marveling at the Apple stock price on my blockchain app, and now it ends with me essentially, describing what could be the future markets, right? I feel that we've been on a little adventure here, a mix of tech discovery, financial intrigue, and a dash of philosophical kind of debate about the direction of crypto, and I love it, right? These are the kind of developments that remind me why I'm actually in this space, why I spend evenings reading white papers and news instead of binge watching another show. Okay, I do that sometimes too, but it's because every now and then you stumble on a story like this, and it's like seeing a glimpse of the future. And now, if you've made it this far, right? First of all, high five to you guys, right? Thanks for hanging out with me on this exploration kind of journey. Now, I hope it was an eye-opener for you as it was as much for me. And if you've enjoyed this little adventure, you can do me a favor. You can hit that like button, hit that subscribe button, right? It's one click for you guys, but it means an awful lot to us here on the channel. And it'll make sure that you don't miss the next deep dive. But, you know, a bit of fun that we kind of take along the way. Until next time, though, stay curious, and I'll catch you in the next one.